Now let's discuss all of that in details. Joining us on the show today to walk us through some of the commodity strategies and also answering a lot of questions we have is Mr. Naveen Mathur, Associate Director for Commodity and Currency at Angel Broking. Mr. Mathur, as always, a very warm welcome to the show. So I have a couple of questions for you before actually I ask your strategies for the day. My first question to you is on the gold. Now, since Friday, it has been a big development. We are suddenly seeing a lot of increase in the uncertainty, a lot of increase in the credit default swaps, which is a typical indicator of volatility. And usually the gold price, they respond favorably to increase in the volatility. So how are you seeing the gold price right now after almost a 5% increase since Friday?
I think, Piyush, first of all, very good morning to you, and thank you for calling upon us. I think going forward, we see gold prices moving on the upside trajectory. Now, there are two things which respond for gold. One is the uncertainty, either because of the financial space or geopolitics or the dollar or the currency factor. Now, both are favorable today. We don't see immediate hike in the federal rate, increase on the Fed rate immediately. We also heard from the Federal Reserve officials that they are going in for a gradual increase, maybe next half of this particular year, one hike itself. But the Brexit actually created too much of, I think, chaos and uncertainty into the financial markets. I think that's one of the main reasons which is holding up Fed and other banks to tighten the policy rather than going in for the loosening policy. So they are not tightening the policy as of now, as we anticipated last year when the Fed started off with the increase in the interest rate. Now, the expectation at that time was that the Fed would do around 4 rounds of increments this year. The dot projections were talking about 4 increments of 25 basis points each this year, which is approximately 1% increment from 0 to 0.25 levels, which the Fed kept at around that levels from 2008 December onwards. Now, since that particular news have come up and the Brexit also creating uncertainty into the markets, we feel that the dollar may weaken. Maybe initial jerk is on the appreciative tone, but it may weaken because of these developments, and therefore the gold prices would go up. The second important part is the safe haven demand. The last jump which we have seen into the prices of gold is basically because of the uncertainty. After Friday referendum results, the gold prices touched a high of around 1350, which is almost, I think, 4 or 5 years high. So I think the markets are taking cues from both the currency and the economic uncertainty factors. And going forward, we feel that the markets in next few months, say 2 or 3 months down the line, if the uncertainty and chaos continues, may touch up even $1,400 levels in international markets.
Sure. Sure, sir. So actually, just in very brief, what you're saying to me is gold actually is looking bullish for today also, and also you're saying that as we move towards the July month, the trend should remain up?
Absolutely, Piyush. The rupee also is a little bit on the depreciative tone, or the weakness we are seeing in rupee, although we stand a bright spot among the emerging markets. We are holding up in the equity markets, if you see, in spite of being the turmoil in the financial markets. Yesterday we were either flat or slightly up. Today we are also holding up. So I think the market situation in India is much, much better than the other emerging markets, and therefore we don't see much of the weakness in Indian rupee. But still, because of the uncertainty in the markets, the gold demand may be pushed up on the higher levels. Therefore, the prices even in India can be seen in a territory of around 32,500 or so. They are currently trading at around 31,400, 500 levels.
Sure. So, which means that gold basically looks positive. Now, let's turn our attention towards cotton, which is the agri commodity. Now, cotton, I discussed with you last time, and again, the cotton futures, they are trading higher in China. And I was reading some reports, like where I was reading that the cotton acreages, basically this time, they have been lower than expectations from the government side. Primarily, there has been some switch in terms of the crop patterns. And also I was seeing that in our basically neighboring nations like Pakistan, there also cotton harvest has been lower. But right now at the current price, do you think everything is priced in the stock and it's more about speculation now?
Piyush, I think 15,600 levels were where the cotton prices were trading in April. Today, we are seeing the prices of around 19,600 levels for the MCX cotton contract. All the fundamental reasons which you said about the less of supply, acreage factor, the demand being little less, our demand actually being little higher and supply being lower. The acreage also is around 26-25% on the downside as per what the latest estimates have been. I think the overall price trajectory therefore remains still slight bullish. We are not expecting too much of the jump from here, from 19,600 levels. The prices may not move beyond 20,500 to 21,000, but still, because of these fundamental reasons, the prices have moved up. Up till and unless the supply does not come into the market, I don't see much of the future prices to go down, and therefore we are still maintaining a kind of a bullish trend for this particular commodity, but not beyond 20,500 to 21,000 levels.
Sure, so which means bullish for now. And I remember last time also when you said, I think we have followed the trend till now. Also now let's talk about the copper. Copper basically indicative of industrial demand. We actually have seen over the last 2 days, copper basically has seen some recovery. How are you seeing now copper?
Did saw some recovery because of market stabilization effects after the Brexit. Lot many government officials came up yesterday. We saw the Chancellor of the Treasury yesterday speaking about that the strength of the UK is pretty strong, and means they don't see much of problems because of the economy, because of this strong foundation which over a period of time the government has made the UK to stand for. But I think therefore the prices have been slightly on the upside. Today we are seeing MCX copper prices on the futures at around 322, 323 levels. But I think the copper or the industrial metals, particularly let it be copper, aluminium and all, would be slightly in a range-bound trajectory. They may be kind of prone to the news which may come in, but I think more of the range-bound movement is expected. Economy, as per the estimates after the Brexit,
would you advise basically in terms of strategy? Actually, we are running slightly short of time, so I'm trying to actually move towards the strategy.
323 is what the prices are. I think on the lower side at around 320 you can buy in for the target of approximately 325, 326 levels.
Okay, sure. And apart from that, would you actually like to advise on some other strategies?
I think crude is looking slightly positive from here. We may see the crude prices bouncing up to an extent of around $50 once again. So I think crude looks positive. As I said, 314, 15, or it's kind of, if you're a little aggressive, 320 also on where you can buy in the copper. But $50 is something where we are looking forward for crude in, say, in a month's time, back again.
Great. Before we go, just one last question, like in very, very brief. Any view on natural gas? Sideways, bullish or bearish?
I think sideways to slightly bullishness would be there for the natural gas in the coming week.
Thanks a lot, Mr. Mathur. It's always a pleasure. And as I remember, basically we had talked about gold and cotton, and the trend basically has remained the same. They have basically been bullish. Last time also we were actually talking to Mr. Mathur, and he was saying that cotton basically is actually looking bullish. The demand conditions are actually favorable for cotton price, cotton bulls, and so far cotton actually has outperformed. So till the time I think additional supply doesn't come, we are actually entering the monsoon season. So as the harvesting happens and as the additional supply starts coming into the market, till that time cotton basically is looking good. And also the gold, just remember, dollar and gold, they both have moved up. So, and it was a very good point which was being made by Mr. Mathur, that as we move towards the Fed policy, and it's most likely the rates hike basically is now off the table, perhaps some disappointment actually can come around there, And if actually dollar weakens from there, then perhaps again gold bulls actually can have something more to cheer about. So that's basically the summary. Gold, cotton, and also keep an eye on the natural gas prices. They basically they have moved up in today's session. So time for a short break. On the other side, we get you an exclusive conversation with the market guru of the day, Arvind Sanger of Geosphere Capital. Stay tuned.